Hey everybody, Brian Bogner and Greg Towner here with Parallel Portfolios, talking to you on our monthly video update about the markets and the economy. Got a lot to talk about this month as we wrap up 2017, so let's go ahead and get started. All right, today we're going to cover a number of things, but as you well know, if you're watching the news and seeing what's going on, it's all about the tax plan right now. Okay, so what are the main tax changes that we need to talk about? We're going to cover that. How might it affect the economy, and how does it relate to our investments? So let's go ahead and get started. But Greg, before we even get into this tax thing, I got to ask you, because everybody and their mother and grandmother and aunt and uncle and everything is talking about this. Let's talk about the one topic here that seems to dominate everything, this thing we're calling Bitcoin. What are your thoughts on Bitcoin?
I know, Brian, everybody's asking about it. I've had friends come out of the woodworks asking me about it that aren't even involved in finance in any way. You know, I know we both started our careers back in the tech bubble in the late 90s, and we probably thought we'd never see anything like that again. And Bitcoin, in a lot of ways, has even surpassed that, honestly. One of the first things that I thought of when I started kind of looking into Bitcoin is, when we took a look at the philosophy of how we invest, we always wanted an investment to be understandable. What's a company do? What's a security, trying to achieve? Honestly, as much as I've looked into these, it's really hard to have any understanding on Bitcoin and cryptocurrencies. So that's kind of the first kind of headwind that it faces from our perspective. And then the next thing, I know you've talked about how it acts as a currency, or supposedly acts as a currency, but it really doesn't have a lot of usage for transactional type things, at least at this point. And then like a bond or a stock, does it have cash flow? Does it have earnings? It does not. So a lot of challenges there for us to kind of really evaluate it from a traditional perspective. But of course, things aren't always traditional. We want to stay open-minded, and things change over time. So lots of, inventions and so forth. So we don't want to say that, hey, things may not be different in the future. But I think the way that we would look at this is, be careful when you hear people's predictions about, how much higher this can go, or the other side, that it can go to zero. None of those people know. Frankly, we don't know. We're doing our best to dig into it and become experts, because maybe down the road it could become part of an asset allocation. But really right now, when we look at Bitcoin, honestly, if you want to take a shot at it, treat it like your Vegas money. You take out this money out of the bank, right, to go to Vegas, have a good time. We all have these dreams of hitting it big. We also know if we come home with zero, that's honestly what we anticipated deep down anyway. So
Right.
If you want to give it a shot, think about it that way. But until things kind of clean up a little bit with this story, consider it pretty speculative.
Okay, good stuff. All right, well, let's get back into the tax conversation. So what are the main tax bullet points that we need to be thinking about as this law passes this week?
Right. So certainly people have been hearing a lot about the tax changes, and there's a lot of news stories about it. But let's just kind of drill down to the basics and not dig too deep. For individuals, what does it mean? It's going to vary depending on where you live and your tax bracket and all that. But for the typical person, you're going to see about a 2 to 3% tax cut. So not huge, kind of in the range of what maybe a normal wage increase might be each year. But still, most people, assuming this passes this week, will see their paychecks go up, kind of in that range starting probably February. Now, really, Brian, this plan is mostly about the corporate tax rate cut, trying to make the U.S. more competitive to other countries.
Mm-hmm.
Yeah, exactly. So the cut is going to go from 35 down to 21 for corporations. Huge difference there. That's really what the markets are looking at and economists are looking at. In addition to that, a lot of these corporations, particularly the larger ones, technology and healthcare and so forth, they have a lot of cash overseas, billions and billions of dollars. They're going to be able to bring that back at about a 15% tax rate. A little higher than maybe they were hoping for, but still competitive enough where they're going to be able to bring this big chunk back. Those are kind of some of the key points, but we always want to keep in mind, of course, the behavioral side of things, Brian. Separate your political views from your analysis. Don't, whether you like what they're doing, dislike what they're doing, that really should be meaningless compared to how you actually analyze the situation.
Yeah. Well, that's a good segue. With that being said, let's look at some analysis. Let's start with the economy. What do you think that, the impact this will have on the economy in general?
Yeah, we've been showing in our monthly reports and our monthly videos that the economy's been gradually, gaining steam for a while. So as we look back at what tax cuts have done in the past, this chart shows us 2003, the last major tax cut. And this current plan, and assuming it passes, is actually a larger dollar amount than '03. It's really the second largest ever, behind just the Reagan cuts in the '80s. So we see in '03, we were coming out of recession then, so not exactly comparable to now, but really the first year or two, big jump up in GDP. It really boosted growth. And we think for different reasons that this plan has a chance to boost growth, at least over the first, the shorter term, the first 12 to 18 months. We look at some of the details in it and we look at historical measures. It probably has a chance to boost GDP, not nearly as much as maybe in '03, but certainly by certain amounts.
Yeah. Well, you and I both know that when a lot of times these tax cuts get proposed, a lot of it can be window dressing in the sense that, it's kind of like just a quick hit to the economy and then things back to normal. And then sometimes there are structural changes that can last a long time. So in your opinion, do you feel like this is a short-term thing, just kind of a quick fix, and then, we're still dealing, or do you feel that this could be potentially structural?
Yeah, that's a really good question. And honestly, a lot of that boils down to what do the actual corporations end up doing with this extra cash they're going to have. We've shown a lot about how corporations are already, record earnings and record cash on their balance sheets. Now they're going to have even more. So hopefully they're going to invest some of this in themselves and in their employees and invest for growth. If they do that, I think this could be a good long-term benefit. Mm-hmm. But I know a lot of them have already talked about using some of it, or a lot of it perhaps, for share buybacks and dividends and that sort of thing, return of capital to shareholders. And certainly some of that is fine. But that would probably be more beneficial, call it a year, maybe two at the most. So we're hoping to see a good portion of it invested for the long term. I think that will be the determinant of the time frame that this kind of helps the economy.
Yeah, good perspective there. Well, so obviously the big benefit right here, corporations. So how does that relate from an investment standpoint? We buy stocks. These are companies. They're going to get, like you say, more cash. What are your thoughts around that?
Yeah, of course, the economy and stocks, as we know, don't always move together at the same time. So, when we look at things, we've talked a lot about what has been moving the market this year up. We've had 20% up in the broader U.S. markets, roughly. We've shown how the stock market has tracked to earnings growth. We've talked about the liquidity that has been provided by central banks. We think that's mostly what's moved the market. A lot of people think that the tax cuts have already been factored into stocks. We're not so sure. As we look at this first chart here, this is a basket of high tax rate stocks. And going back into 2016, it was really doing nothing, chopping around. A big spike up at the end of 16 is when President Trump won the election and started immediately talking about big tax cuts and all of that. And so everybody got really excited. And these types of stocks that have a high tax rate that would benefit from the cut spiked higher. And then we see for the next, call it 10 months, that just all evaporated as, the Congress failed to have any achievement in the healthcare plan and lots of turmoil in DC and all that. And people just thought, there's no way they're passing a tax plan. It's just not going to happen, Brian. But now, as that area that's circled there at the end, really just honestly the last couple of weeks, we've seen people realize, actually, you know what? They might get this done. And so some of these high tax rate stocks have actually finally started to outperform. Really, they're just back to, call it flattish. Mm-hmm. So certainly some of it is factored in. But we're not positive that it's all factored in, because most of the market move has been the economy and earnings and the Fed's liquidity.
Okay. Where do you think could be, what area of stocks or the market could be one of the biggest benefits of this cut?
Yeah, well, certainly financials and banks stand to benefit from tax rate cuts. But beyond that, smaller companies actually are an area that traditionally have higher tax rates. They don't have the fancy accountants that the big corporations do to kind of work their tax levels down artificially. Yeah. So they pay the full tax rate. So they stand to benefit in a big way from tax cuts. And we can see on the top of this chart, hey, they've done pretty well here lately, but comparison to the broader market, the bottom chart is small caps compared to or relative to the broader market. We can see they really haven't done much. So again, another reason that we think, hey, maybe the tax plan, the tax cuts for corporations has not yet been fully factored in. Certainly some of it maybe, but some of these areas that would benefit the most have only recently just started to move higher.
Right.
So again, another reason for us to say, hey, maybe there's still upside there.
Yeah. Okay. All right. Well, good. All right. Well, I know we are getting long in time here. So what, give me your, let's wrap it up, man. Give me your summary.
Yeah, exactly. Well, I mean, we think all year investors gave really low odds to Congress passing this tax plan, and they're starting to get surprised and starting to reposition into areas. So that's starting why you're seeing the market move a little bit more here recently, and why it may still have further legs to go. You know, historically, hey, the economy benefited, at least in the short term, from tax cuts, and hopefully that can go both short term and long term this time. Mm-hmm. Stocks tend to do well. You know, one thing we didn't mention, we actually think from all the work that we've done and looking at companies' comments, we might see some increase in mergers and acquisitions next year. So we might see companies, now that they have clarity in the tax plan, start to do a little more acquiring, and that can help stocks as well. So one thing I would kind of wrap it all up with, Brian, is really saying, hey, set aside your political views. Most important thing, focus on data, focus on the trends, and really most important, focus on your plan.
Yeah. Well, I couldn't say better myself. Good summary there. Well, as always, if you have any questions, you know how to reach us. There's our phone number. There's Greg's email address. You can shoot us an email, give us a call. We'd be happy to go over anything, any questions you have here. So, hey, have a blessed Christmas. Have a great New Year, and we will see you next year.